Hello traders, and welcome to my beginner's tutorial on how to trade Bitcoin over on Bybit. Now this is a step-by-step guide. We're going to cut through all the jargon. It's going to be really simple. I've ever put chapters in the timeline down below. So if you want to navigate through, rewatch something, you can easily do that. Feel free also to share this with any friends that may be interested in trading Bitcoin, Ethereum as well. If we could all smash the like button, that would be super. Help this video out, help the channel, please subscribe as well, and that way you can join all my future Bitcoin, Ethereum trade action. And also don't forget to claim your bonus, $4,500 on Bybit. You just need register and make your first deposit and you can claim your bonus. All the link in the description or in the pinned comment. With that said, let's get straight into this video. So first up, what is Bybit? What is leverage trading? So Bybit is a platform where you can buy or sell Bitcoin when we are trading futures, and I'm not going to go into the complexities of what a future is. It doesn't really matter. Bybit allows us to buy Bitcoin and Ethereum on margin, and when I say we can sell Bitcoin in Ethereum or margin, that's called shorting. We can make money on Bybit when the price is going up and when the price is going down. When it comes down to leverage trading, you could think of it like a mortgage on a property. It's really simple actually. Let's say for example you were buying a $300,000 home and you wanted to put down 10% down payment. You're putting down $30,000, but you have control of the asset that's worth $300,000. That would be a 10-to-1 leverage in trading terms. Now of course if the property price goes up, let's say 10, so it's now worth $330,000, you make the 10 on the total value of the trade, or in this case the property. So you would make $30,000. Now you've made that 30,000 by just putting in $30,000 because that was 10%. But in actual fact you've made 100% profit because you've put down 30. You've made another 30, and the same is to be said in leverage trading, whether it be forex or in this case crypto. So in a nutshell, when we trade on leverage we have the potential magnified earnings, but we also have magnified potential losses. This is why trading can be high risk. So you're in the right place to watch this beginner tutorial because we're going to cover all the basics before you even put on a trade. That's really important. I hope that example makes sense to you, but obviously if there's anything that's unclear, feel free to leave a comment below and I'm happy to get back to you as soon as possible. So in order to get started, you're going to have to sign up for Bybit and get an account. Now what you can do here, if you look underneath this video, the pinned comment will be my affiliate link where signing up with my link you'll earn up to $200 in bonuses. When you deposit using my links, also a great way of supporting the video, supporting the channel. So I really appreciate that, guys. Now upon clicking the link here is going to bring up this page where you register for an account. You literally can register in about 30 seconds. All you need is an email address, set up your password, and you're good to go now. An important thing to mention, guys, is a VPN. If you're in the States or in the UK, you will need a VPN. I recommend ExpressVPN. They're probably one of the best VPNs I ever used. Really inexpensive, a couple of pounds or dollars a month, or you can check out NordVPN. They're pretty much the same thing. Once your VPN set up, you're good to go. You can start trading. So now you are all set up. You now want to deposit some Bitcoin or Ethereum into your account, and the way that you do that is you're going to go to your username. You want to click onto my assets. It will come up with this page here where you can see your holdings of Bitcoin, Ethereum, and a couple of other cryptocurrencies as well, including XRP. That's US dollars, by the way, if you just want to deposit cash. Now what you do if you're already holding Bitcoin or Ethereum, you can deposit it straight into your wallet. There on Bitcoin you can see here deposit or Ethereum. Make sure if you're depositing Bitcoin, it goes without saying deposit into Bitcoin. If you're doing it into Ethereum like that, as an example, let's say it's in coin Bitcoin. You simply click on deposit. It will generate a QR code which you can use to scan. Say for example, if you're sending it from a Coinbase wallet, equally you can use the wallet address, and obviously you can set the payment straight there. Payments typically in my experience take between 5 and 20 minutes. It's pretty quick. If however you don't already have Bitcoin or Ethereum or any cryptocurrency for that matter, what's really good about Bybit is that they have a fiat gateway. You can click on this here and you can actually buy Bitcoin directly through their platform, or Ethereum for example. Let's say you wanted to buy $1,000 Australian dollars. $1,000 Australian dollars at the time of recording is 0.0131 Bitcoin. So you can easily buy Bitcoin straight into the platform. So that's how you deposit. Next up, we're looking at two different trade types that Bybit offer. Now this can be a bit confusing at first for a lot of traders, particularly people that are completely new to trading, particularly crypto trading, but these two options are really simple and they actually both have a purpose. I tend to normally use inverse perpetual, and I will explain what that is. So inverse perpetual is when it's coin margins. So you're using Bitcoin or Ethereum as the underlying asset in a trade. USDT perpetual on the other hand is when you're using cash. You're using US dollars to fund a trade. The reason why you have the option and have the difference, let's say for example you thought Bitcoin was going up, you wanted to put in some long positions. Obviously if you're using Bitcoin or could be Ethereum, a cryptocurrency, to fund your trade, you're going to end up being paid should you trade win your long position, trade in Bitcoin, and of course if you're banking on something going up, you're going to want to be paid in that currency. So which is Bitcoin in that sense. On the other hand, if you wanted to short Bitcoin, because obviously on Bybit you can make money shorting and longing cryptocurrency, you may not necessarily want to do it on coin margin. The reason for that is if Bitcoin was going down in price and you want to trade because you shorted it, you wouldn't necessarily want more Bitcoin if the price of Bitcoin was devaluing. So you would better be off in cash. However, for the most part you're going to want to choose inverse perpetual, because assuming you're pretty bullish on Bitcoin, and most of the time we are going long on Bitcoin, generally speaking, but there might be times where you want to use the USDT perpetual if you think it's going down, or another cryptos going down. That tends to make more sense. I hope it's a clear explanation, but like with anything in this video, just leave a comment below with any questions. I will promise to get back to everybody. So the next step here, we're going to look at the type of margin you can use. So we are going to assume we want to do inverse perpetual on, let's do Ethereum. Bitcoin, Ethereum is the same. We will do. I've been typically trading through them a bit more at the moment. Let's look at the difference between cross and isolated margins. Now this might be again something people look at Go, or I'm not sure about this. It's all a bit technical, a bit confusing. It really isn't. It's very simple once you understand it, and I'm going to explain it in a very simplified way. Using isolated margin, you're using the amount you've put on for that trade. You can only lose the amount that you've put on for that trade. Of course, you can mitigate losses with things like stop losses, and we're going to cover that in this video coming up shortly. But using isolated is differently my suggestion for beginners, because you can only lose what you've put into that trade. If you're a bit more experienced, or when you become a bit more experienced, you may consider using cross margin. You're then able to use your whole portfolio of cryptocurrencies to fund a trade. It can make sense in certain scenarios, but for beginners I would stick with isolated for now. So guys, that brings us to our next point, which is the margin you use. We briefly touched upon in the start of the video what leverage is, and now we understand a bit more about what leverage is. You can understand how to use it in a trade. So as you can see, at the moment we're set at 10x leverage. Now this is our current price of Ethereum, and the quantity here in US dollars, so it's simply the value of your trade. Don't think too much about all the price of Ethereum right now or price of Bitcoin. Really what matters is the amount of money you want to trade. And let's say for example it's 1000 US dollars. For simple math, 10x leverage would mean you would only need to fund the trade with $100 of your own money. It's 10x, 10 times 100 is 1000, so you're using 100. Let's say for example you do well on your trade and it goes up 20%, you earn 20% on the $1000, which is $200. Had you just invested set your 100 and it went up 20%, obviously that would be 20%, so that's the power of margin. But like I said at the start of video, can work against you as well, and that's why we're going cover risk to reward and stop losses shortly in this video as well. So now let's look at the basics of putting on a trade. So what you have here are three different trade types. You have a limit order, a market order, and a conditional order, and I will explain what each one of those are. So first of all, we've got a limit order. A limit order is there so you can set the price at which you want to enter a trade at. The market order is a price to just get into the market at what the current market rate is, so you can execute a trade quicker, but you may not necessarily get as good of a rate as if you were to do limit order. Now a conditional order is there for you to put in a price that is triggered, so you can execute a trade whether it's a short position or a long position when if the price is hit. So you may typically use that, and just looking at this graph here, don't worry about what's going on in the graph, that's not important. But let's say for example we were here, you can see at this point in the trade and you didn't know what was happening here yet, because we've only at this point here at the price of around this, and you didn't know if the price was going to go up from here or down from here. What you could do is use a conditional order to set a price here. For example, for a buy, so if the price were to get here, you would buy it because it's broken through this resistance, or you could set a conditional order here, so if it broke down you may think okay, it's selling off, and that conditional order is only activated when the price is hit. So conditional orders good to kind of systematically put in a trade in place, so you don't have to be watching the chart like 24/7. So let's look at some trade examples using a limit order, a market order, and a conditional order. First, let's look at a limit order, so we can see the current price here for Ethereum, but let's say we wanted to enter this trade when the price dips to this amount, for example. So what we could do is put our value into the limit order. That's the price of Ethereum that we want to buy the trade. We want to buy a contract that's $1,000 US, and again all that means is our trade is $1,000 and we are using 10x leverage. So actually the amount of money you are using for that trade is 100. Okay, so what you can do is simply press buy loan and it will put on the trade. I'm not going to do it because I don't want to do that particular trade. It's an example, but that's what you would do. If you want to short it, you think it's going down, you can press sell short. So next up, market order. Very simply with market order, you just simply need to put in the price of the trade $1,000 and buy a short. You don't need to set the limit price because you're entering at the market rate. One of the main things I will mention about using limit orders: when you do a limit order, you are a market maker, and with market makers you actually get a small rebate of any fees that you have to pay to buy BET for trading. The fees on Bybit are quite reasonable, and I'm going to cover that later in the video, but it's nice to get a rebate of the fee for being a Bybit maker if you use market. There is a small fee attached to it because you are just able to enter the market. So conditional order trigger price. What does a trigger price mean? So again, you can use market to limit for a conditional order. Let's say we put a market in this particular circumstance. Trigger price you might want to put again at $1,730. That's the trigger price. And a contract of $1,000 US. So when and if it triggers at this point of dollars, you can select buy or sell short. Equally, if you wanted to do a conditional order, that was a limit order, you could set the trigger price, the limit price. You pretty much want to put the same amount in that figure. Again, you can put the quantity, and you should put post, only that way when it closes it will force it to close as a limit order. That's better than doing it a market order because you get the rebate of that fee. So let's look at stop losses and taking profits. This is one of the most important part of trading. Stop losses allow you to set a price that is almost like a protection in terms of price going further down, so you can actually mitigate your losses. Now it's very important to set your stop loss above your liquidation price, and the next chapter in this video is liquidation, and that's equally as important. But when it comes to stop losses, you always want to have a stop loss on a trade. If you don't have a stop loss, you could meet the liquidation price, which is very dangerous for your funds. Take profits, on the other hand, is a way, as it suggests, you can take profits at a certain price. When you set a take profit, you set it at the price where you believe the price is going, and the reason you would want to make automate that is because the price could go up like that and for it to only go down again, and you may see on the chart that actually you think the price is going here. So you may want to take your profit here before the price rebounds back down again. Okay, liquidation. Liquidation is when you basically run out of margin. This is why it's important not to over leverage yourself, not to use too much margin. The best thing you can do in terms of not getting liquidated is to use the Bybit calculator. Very handy tool which not too many people use when they start trading, and really it's one of the most important things because you don't want to be liquidated honestly. You can lose a lot of money that way, so let me warn you of that risk. The way you use this calculator, let's say for example we're on 10x leverage. You enter your leverage, let's say you're buying $1,000 and we are on Bitcoin. We went back to Bitcoin here with the price. We can see it's currently at around this key level. Let's say that's where we want to enter the trade, and then it will give you the liquidation price. You can see it's here. You want to make sure, for example, if you're in a long position here, you're buying Bitcoin a long trade, you want to make sure that your stop loss is above this price. That means that you will be stopped out of your trade via stop loss prior to liquidation. If you get liquidated, you can lose your whole fund of that trade, so you don't want that to happen. So guys, when it comes to closing a trade, there is a few ways in which you can do this. Using the example on my screen, you can see I've got an Ethereum trade upon at the moment. Unfortunately, it's down a little bit, but I'm not worried because I've done my research prior and I'm quite confident. In this trade, I will let you know how it goes. In fact, leave your comments below and I will keep you updated on that one if you're interested. Now what you do to close a trade, you can do it actively while this position is open, and these are all your open positions. Where it says position, you can close it here, limit or market. Again, limit means you can select the price you want to close it and it's going to give you a rebate of the fee. Market will give you to instant access to the market to liquidate your position, not as in get liquidated but sell that position. If you were worried that it was going down very quickly and you want to get out the market quickly, you can select market basically. Another way to close a trade is by using take profit or stop loss. Like I explained, take profit will close the trade should it be triggered at that price. I've got it sell at this value, and I've got stop loss set at this point, so should any of these prices be hit, it will close the trade. The last way you can close a trade, and this is the worst way, is being liquidated. If you get liquidated, you can see my liquidation price of this trade, but I've nicely got my stop loss set by $10 above this, so I won't be liquidated whatever happens. When you set a stop loss or take profit, it also counts as a conditional order. Because it's a conditional order, so to speak, you can see here if I go into my conditionals, I've got a price set here, that's my stop loss, and I've got this value. Both of these are orders, they are stop loss and take profits, but they count as a conditional order. So let's talk about the chart a bit and analyze the chart. However, in my opinion, I much prefer using the actual trading view platforms. I am simply putting the same chart Ethereum contract on Bybit, and there is a lot more choices, a lot more tools, and it's just so much easier to use. The one on Bybit, although it works, it's a bit clunky. I suggest using TradingView. I will put my link down below for TradingView. They offer a free service as well, which you can try. However, there is a paid service, which is obviously a bit better. You get more features. Perhaps start off with the free one and then upgrade to this paid one. So is Bybit safe? Is it trustworthy? Yes, and yes, it's very good platform. I've personally been with them over a year now, never had any issues, and when I've had a very small customer service issue, it was actually to do with this username. I simply contacted the support here and it's very good. Their customer service is brilliant, very transparent platform to use. Highly recommend them. I have tried a couple of the other platforms which they are okay as well, but Bybit was my favorite, and that's why I'm talking about them in this video. Now when it comes to fees, Bybit are kind of in the middle. They are not ridiculously cheap and then definitely not expensive. It gives me confidence that they are priced in the middle because it means they are offering quality, and they are not overcharging either, so they are nicely placed in the middle. You can see here without going into too deep, because you can come and check this page. You just go onto the Bybit and look at the fees, but but you can see what I was talking about here, markers rebate. That is, if you're doing a limit order, you get 0.025% of the feedback, so that's your limit orders. If you do market orders, you are going to be charged trading fee of 0.075. So if you concentrate on just doing limit orders, you can actually trade essentially for free. Now I'm sure there is bound to be questions with this. This was a beginner step-by-step guide. Of course, if there is any questions, leave them in the comments below. If you found value in this video, make sure to smash the like button, share it with your friends, and I look forward to seeing you guys around for more technical analysis videos. And I plan on doing a more advanced, let's say intermediate tutorial on Bybit following this one should the demand be there. Really appreciate you joining me for this one, guys, and I will see you on the next video. It's all for now. Bye.